While it's feared AI technology could take our jobs, new research shows it's creating new roles across multiple industries. Businesses nationwide are already embracing the innovation to improve efficiency and reduce the workload for some workers.
The world today is obsessed with artificial intelligence. Headlines shout that AI is the next industrial revolution. Startups raise billions with nothing but an idea, a few engineers, and a promise. Governments warn about the impact on jobs, while companies rush to adopt AI tools to stay competitive. Venture capitalists are betting trillions, claiming that if you're not part of the AI boom, you're already behind. Everywhere you turn, someone is saying the same thing. This is the future, and it will happen faster than anyone thinks. But here's the paradox. The AI boom feels revolutionary, unstoppable, inevitable. And yet, something about it feels painfully familiar. It carries the same scent of overconfidence that filled Silicon Valley in the late 1990s, when the internet was sold as a magic formula for endless wealth. Millions of investors threw money at companies with no revenue, no customers, no realistic path to survival. And yet, they believed the hype. They believed the future had arrived. Because 25 years ago, the internet created a bubble almost identical in structure, if not technology, to today's AI boom. From 1995 to 2000, anything with a .com in its name became automatically valuable. Investors believed profits were irrelevant, growth was enough. And for a moment, it seemed like the old rules of business no longer applied. People quit their jobs to day trade, companies launched overnight, and stock prices skyrocketed without justification. This wasn't unusual. Economic speculation repeats in cycles: 1873, 1893, 1929, 2000. Optimism outruns reality, speculation outruns value, and human suffering follows. The Panic of 1873 came after European railroads overbuilt, banks lent without restraint, and investors panicked. The crash of 1893 saw banks fail, companies close, and unemployment skyrocket. 1929, the Great Depression, erased entire life savings and forced families from their homes. 2000, the dot-com crash, erased trillions in market value. Each time, hope and hype were the same fuel. The crash was the inevitable eruption, and history repeated itself. The media loves a dramatic narrative, and so, as AI headlines scream revolution, we see images of tech conferences, CEOs announcing groundbreaking innovations, and engineers working long nights to build tools that don't yet have a market. Venture capitalists are depicted as visionaries, pouring money into ideas with little more than a pitch deck. Stock charts show dramatic increases in valuations. The world feels tense, urgent. The future is arriving. And yet, underneath all the excitement, there is a quiet warning history has been trying to give us. Economies work like volcanoes. Pressure builds slowly over time. Capital, speculation, and hype accumulate like magma in the Earth's crust. For years, the pressure is invisible. Small tremors, early warnings, go unnoticed. Failures occur quietly, dismissed as minor. But the magma keeps rising, fueled by optimism and unchecked investment. At some point, the pressure reaches a tipping point, and then, suddenly, violently, the market erupts. The dot-com bubble was one such eruption. Companies that should have failed survived long enough to burn investors' money spectacularly. Pets.com, Webvan, eToys, they thrived temporarily on cheap capital and hype before vanishing. Amazon, eBay, Google, the survivors, were not the loudest or most hyped. They were disciplined, patient, and had real value to offer. The collapse was catastrophic for those who ignored fundamentals, but it also cleared the ground for the companies that would define the modern internet. Today, AI is following a similar trajectory. Startups are being valued at billions with no revenue. Companies pivot overnight to adopt AI, often without understanding how it fits into their business. Engineers move from company to company chasing hype. Investors fund ideas without questioning sustainability. The same reckless optimism is present. The difference is that AI is real. The technology works. But profitability does not follow invention automatically. Creative destruction, the natural process by which inefficient companies die and resources flow to better ideas, is being delayed. Zombie firms are being created. Companies survive not because they are valuable, but because funding is available. When the inevitable eruption comes, the damage will be immense.
The human consequences are rarely acknowledged. During the dot-com crash, parents lost life savings, children saw education interrupted, and entire communities were devastated. Jobs vanished, confidence evaporated. Economic eruptions always hit ordinary people first, not investors or CEOs. If the AI bubble erupts, the same human costs could follow. Engineers who left secure jobs may find themselves unemployed. Investors could lose retirement savings. Workers who depended on the AI revolution may see opportunity vanish overnight. Yet history also teaches another truth. Collapses do not destroy progress. The dot-com crash cleared the market for real innovation. Google, Amazon, eBay, these companies not only survived, but thrived, creating platforms that reshaped society. AI, similarly, will emerge from its hype-fueled period stronger. Companies with real value, actual revenue models, and tangible products will dominate. The hype will vanish, leaving behind the structures that actually serve humanity. There is another danger, more subtle: misaligned incentives. During both the dot-com era and today, those who create risk rarely feel the consequences. Venture capitalists, CEOs, and early investors reap rewards even when their bets fail, or are insulated by the broader system. Meanwhile, workers and ordinary people bear the brunt. Low-risk parties receive windfalls. High-risk parties take losses. Economic systems, if left unchecked, reward speculation over prudence. The AI boom, unchecked, risks amplifying this imbalance. Governments and institutions are starting to respond. AI ethics boards, regulatory proposals, and corporate guidelines are emerging. But technology moves faster than policy. The question is whether intervention can prevent catastrophe without stifling innovation. Too little, and the crash could mirror history's worst. Too much, and the system becomes artificially constrained, preventing the growth that is its own reward. Balance is delicate. The solution lies in understanding the mechanisms: creative destruction, efficient allocation of capital, and the need for failure to create space for success. Consider the broader historical sweep. From 1873 to today, patterns repeat. Overbuilt railroads in 1873 caused the Panic of 1873. Banks lent without restraint. Investors speculated. Jobs vanished. 1893 brought another crash of similar structure. Railroads overextended, investors panicked, banks closed, unemployment soared. 1929's Great Depression forced families from homes and wiped out life savings. 2000 erased trillions from tech. Each time, human suffering was intense. Each time, recovery came from those who built real value. Each time, society forgot the lessons of the previous collapse. AI, despite its promise, is no exception. The technology is real. Applications are possible. But the pattern is familiar. Cheap capital floods the market. Speculation dominates. Hype drowns rationality. The inevitable eruption approaches. And yet, humans continue to believe, as they always do, that this time it will be different. The final lesson is clear. The AI boom is not inherently dangerous. Its danger comes from human behavior, from overconfidence, from blind optimism, from a failure to respect the lessons of history. AI will create enormous value. AI will transform society. But only if the system corrects itself responsibly, only if we balance innovation with accountability, and only if we recognize that history is not a guide to predict the future. It is a mirror showing how humans behave when confronted with change. The moral is simple. AI will not destroy the future, but forgetting history might. Technology does not fail. Humans fail to understand it. Markets do not collapse. People ignore fundamentals. Hope and hype are powerful motivators, and they are also dangerous illusions. We have seen this story unfold before. We will see it again. And if we pay attention, we can survive, adapt, and emerge stronger. The AI revolution is real. Its path will be turbulent. But if we remember the past, we can ensure that when the magma finally erupts, the survivors are not just lucky, they are wise.